Hello everyone, it's Dale here and it's the 3rd of November 2017. I'd like to show you my yesterday's trading because yesterday I started to employ a new trading method that I've been watching for a while, that I've been considering for a while, and yesterday I finally started using that, and I'd like to show you what that method is and how I use it. So let's walk through all my yesterday's trades and I'll show you where I used that method and how it worked. So let's start with a US dollar, Canadian dollar. I had a long level there, which was at 28.47. This long level was based on those volumes that got accumulated in this area. After this, there was strong buying activity, indicating strong buyers accumulating their positions right there in this area. So I hope that if the price came back to this area, there will be a reaction of those buyers. There wasn't. This was the Asian session and the price just went past that strong long level without any reaction. So when I came in the morning to the computer, I had a stop loss from this trade, and what I did was that I employed my new method there, and when the price came back to this area, exactly to the place where my long level was, I went short right there. And this is the new method I wanted to show you. So this method was like that. If you take a stop loss and the price just goes past the level you want to trade without any reaction, like that, you wait for a pullback and enter a reverse trade from that area. So that's basically what I did on the US dollar, Canadian dollar, and despite taking a loss there, I reversed the trade when it came back to 28.47. I went short and I took a profit there. So that was a perfect reaction to that level, and I was basically able to scratch the loss from the Asian session on the US dollar, Canadian dollar. Let's have a look at the Australian dollar, US dollar. I didn't set my limit orders for the Australian dollar, US dollar yesterday because there was upcoming news in the Asian session concerning the Australian dollar, US dollar, so I didn't really want to trade during the news. If I was trading, if I was at a computer, I would be entering a short trade from 77.13 and I would take a stop loss there. Again, I wasn't at the trade because there was a news in the Asian session, so I wasn't trading. But if I was at the computer, if I wasn't sleeping, I would definitely enter a short from this area and take a stop loss there. But as you can see, right there was a pullback to this area, to the exact level where I entered a short trade. I was asleep at that time, which was pretty unlucky because if I wasn't, I would go long from there because of that method I just showed you. Alright, so this is the level I went short from, stop loss there. Wait for pullback and go long from this area, the exact price level. And that would be another profit. I didn't take it, but if I was at the computer, I would enter that position and I would take a profit there, 10 pip profit. I also had another level on the Australian dollar, US dollar yesterday. Unfortunately, the price turned 2 pips sooner. The level was 77.14 and the price turned 77.12, and there was around 9 pip reaction to that level. So I considered it tested. I didn't take the level when it was hit, so I saved myself a losing trade. I usually trade like that when the price turns a little bit before my trading level and makes significant reaction. I usually discard that level because it already seems tested, because the reaction that I was waiting for came a little bit sooner, which was a shame. I don't really try to enter that trade again. Let's have a look at the euro dollar. There was a very nice and precise trade on the euro yesterday. It was a short trade from 16.58 and it was based on the setup number 1 I was showing at my webinar. You can check it, there will be a link to that webinar at the end of the video. And it's the setup number 1 is called Accumulation Setup, and it's based on area where heavy volumes got accumulated. So this area is right there. Those are the volumes, and this is the area where the volumes got accumulated. The heaviest volumes of the day got accumulated right there in this sideways price action area. From this place, there was a strong selling activity, indicating that most of those volumes were volumes of strong sellers. So I was waiting for a pullback to this area, to the area where the volumes were the highest, and I went short from there. Right there, 10 pips profit. Very quick and very precise reaction, so that was definitely a very nice trade yesterday. Very nice reaction. That was the trading on the euro dollar. I didn't take any more trades there, so let's have a look at the US dollar Japanese yen, which was really busy yesterday. The first trade that I took on the US dollar Japanese yen was also based on volume accumulation setup. It isn't that visible as on the euro because the volumes shifted during the day a little bit lower right there. But at the time I was entering my short trade from 114.13, the volumes were right there in this area, in this sideways price action area. So the setup was basically the same. I saw the volume accumulation right there. After that, strong sell-off, indicating strong sellers accumulating their positions right there. So I was waiting for a pullback, and I thought that the strong sellers who accumulated their positions right there will be defending those positions and push the price lower from this area. So that's exactly what happened. I took a nice profit there. And that was the first trade I took on the US dollar Japanese yen yesterday. Then there was this horrific sell-off, and I took a very quick stop loss from my long trade right there. This long trade was based on those volumes that got accumulated in this sideways price action area. Again, it was the volume accumulation setup. And the market was very aggressive at that time, so I took a very quick stop loss there. And my second long level was right there at 113.65, got approached very quickly. I entered it. Let me show you real quick the reason behind that level. It was also based on the volume accumulation setup. This volume accumulation of those volumes at those volumes took place in this sideways price action. And after that, there was strong buying activity, indicating that those volumes and those volumes were volumes of strong buyers. So I was waiting for a pullback to this area, and I was hoping that those buyers would be defending their buying positions and push the price upwards. So you can see that the price went almost to my 12 pip stop loss, but didn't hit it. The stop loss was right there, around 1 pip lower, so that was very lucky. And after that, there was a very quick rejection and strong buying activity, and I took a full profit right there. So that was another winning trade yesterday. And if you remember, I took a stop loss from this long trade, 113.90. And as I said, when I take stop loss like that, when the price goes past the level without any reaction, immediately to the stop loss, I wait for a pullback to the same area and enter reverse position, which I did, and I took a profit target right there, 10 pips profit target from that trade. So we can see 3 out of 3 cases with this method worked really nicely yesterday. If I wasn't doing that method yesterday, I would have 30 pips less than I had. So this method is really worth watching and trying, so I really advise you guys to try it on your own with your own levels, or with my trading levels that I provide twice a day for members of my Pro Forex course. The address is trader-dale.com, and you can also find a new article that I wrote a few days ago. And the article shows you the exact rules that I employ when trading my intraday levels. So I think it's a very useful article. It's very detailed, and I think that it's pretty helpful. So check it out. And if you would like to trade with me every day, you are very welcome to join me at my Forex course. I'm looking forward to seeing you there. And until then, happy trading!